For once, unions and big business are in agreement. Both groups are accusing the Reserve Bank of being too timid on interest rates, and they're calling on the bank to cut the cash rate when it next meets next month to help prop up the economy. One union heavyweight has gone a step further, repeating his plea for the federal government to intervene on interest rate decisions.
At a crisis meeting of steel workers, union boss Paul Howes says the RBA must cut interest rates or see more jobs head overseas.
I believe the RBA has made the wrong call. I think that the manufacturing industry, in fact most homeowners in this country, need a cut in interest rates.
He also says the federal government must urgently review the Reserve Bank's charter. The government says that's not going to happen.
Paul Howes represents a very small part of the economy in terms of union members and industry trying to drive the national policy agenda, and it's very dangerous if governments are influenced by these types of minorities.
But Paul Howes has found some support from business groups.
The Reserve Bank Board, if it is concerned about the position of small businesses, jobs and the economy's growth, needs to reduce interest rates not by 0.25%, but by a full 50 basis points.
And new data shows many consumers too could do with some interest rate relief. A key measure of consumer sentiment fell 1.6% in April, the lowest reading in 8 months. Economists were expecting a stronger result after signs of global economic improvement and after the Reserve Bank pointed to the potential for an interest rate cut when it meets next month.
I think there's no doubt that the run of economic data in Australia is consistent with the Reserve Bank needing to cut interest rates.
And there was another new piece of data supporting that view. The number of home loans fell 2.5% in February, underlining continued weakness in the housing market. Simon Palin, ABC News.